Saudi Arabia, the Middle East's largest and most liquid economy, and indeed the biggest stock market outside of China, is set to open its doors to foreign investors. Yaniv Pagot, chief strategist at Ayalon Group, is on the line with me now to discuss this move and provide us with an Israel update ahead of today's central bank rate decision. Yaniv, firstly, what are your thoughts on intentions to open Saudi Arabia's stock market to foreign investment in 2015?
I think that the inflow to the stock market in Saudi Arabia will be very big if this index will include it in the MSCI in 2017. So a lot of funds that invest in emerging markets will invest in this index. I think this index will be something like 4% of the EM market. So I think it will be very significant to the market. It will maybe something like $50 to $60 billion inflow to this stock market. And it's a very big thing to the economy of this country.
Despite exclusion from MSCI's global gauges, Saudi Arabia's stock market has already seen growth of 15% this year. Would you expect further elevation once the doors are open to foreign investment? How big is investor interest likely to be?
I think that part of this increase is because somebody knows that it's coming, that they will open the market to foreign investors, and I think this is part of the reason of this increase. And more money that will come to this market in the beginning of next year will help the market to go up. But the market there is not so cheap. The multiples, the price-to-earning multiples is something like 16 or 15.6. It's like the S&P multiple, so it's not very cheap. The economy is growing something like 4% a year. It's a good rate of growing. But I think that part of the elevation that we see from the beginning of the year is because somebody knows that it's coming.
Yaniv, if we compare this with Israel for a moment, despite conflict, stock market value has continued to rise. Can you expand on this? And similarly, could Saudi Arabia's opening up to foreign investors lend stability for the Middle East economy? Should Israel's ongoing conflict create a U-turn in investor sentiment?
I think that the Saudi Arabia stock market has no implication on the Israeli economy or market. It's good that everybody in the region will make business and not wars, so it's a good thing, but I don't think it's any relations to the economy of Israel or the activity in the Israeli economy. I think that the investors in Israel are used to geopolitical activities, and I think that they don't react panically, and we see the market is very, very balanced, and I think that part of the strong market is because most of the money of the Israelis go to foreign stocks in the US, in Europe, and only 30% of the equity allocation is for Israeli stock. There is no home bias in Israeli stock allocations, and it helps the market to be in balance.
Lastly then, how does all of this tie in with Israel's central bank rate decision due for release today?
We think the Bank of Israel will decrease the rate. I don't know if it will be today or later this year, but I think the inflation in Israel is very, very low. It's something like 0.5% in the last 12 months. And when we look forward, the inflation will stay low, below the 1% that is the lowest target of the Bank of Israel inflation rate. And growth in Israel is below 3%, and the war will make it something like the 2.6, 2.7, the growth in Israel. So the bank and the currency is very, very strong. The Bank of Israel will have to decrease the rate to help the economy. As I said before, I don't know if it will be today or next rate decision, but I think it will come.
Yaniv, many thanks for your comments today. Viewers, stay tuned. Charlie Fuchs will be back shortly with an FX insight in today's forecast program. For now, though, it's goodbye from me.